Hello and welcome to BQ Prime. I'm Hiral Dadia. An interesting day of trade as well. In fact, the week has been interesting, where we've seen a good last hour rally on Nifty as well as the Sensex. To discuss more as to what's in store in the month of May, joining us on the show today, we have Sacchitanand Uttekar, Vice President, Technical and Derivative Research at Tradebulls Securities, joining in. Sachit, good afternoon and welcome to the show.
Good afternoon, Hiral, and thank you for having me here.
Always a pleasure. Sachit, my first question would come to you is not about the last hour rally, but now that we are going to enter the month of May, and usually the phenomenon that we see is a probability of sell in May and go away. Does that remain benign now? How is that probability looking like, taking the levels into consideration?
Well, I think honestly, if you look at the last four series, and if you compare last three series with the current series that we saw, I think there's a clear-cut shift in momentum, which was evident, especially in the final leg of the April series when we saw Nifty, holding on to its 5-day exponential moving average. There has not been a single day when Nifty, tried to, decline below its previous day swing low. So I think the phenomena has completely shifted, and the way the data is shaping up, I think it may not be a good idea to sell in May right now. In fact, I think it's a good idea to stay in May and ride on this particular trend of momentum that we are seeing. So if you look at the data, I think 18,300 is the level that we are watching out for from here on. And on the lower side, despite of the fact that the Nifty has displayed of almost 1,000 points rally, there are no signs of any divergence which are evident on their daily scale nor on their weekly scale. So probably this particular structure is getting much more confident. We would be seeing this particular level of around 18,300 probably in the first week of May itself. The kind of supports that we have been observing is that 17,800 was looking more confident, but the way data is shaping up right now, I think for the coming week, I think 18,000 itself would be a very strong support base, going forward. So I think it's better to, carry forward your longs and keep your stop losses close to that 18,000 mark. So probably 17,960, 980 on a closing basis would be an ideal level. And immediate basis, I think we may see a swing towards 18,140 immediately. But this particular momentum should be continued towards 18,300.
Right. So, Sajid, even today, if you see the closing is going to be above those 18,000 levels, and that it was a psychological level, at least that markets were tracking. Between 18,000 and 18,300, is there any specific resistance that we should be watching out for?
There's only one resistance that I couldn't see, which is the February series high, which is placed at around 18,135. So probably, that is one particular crucial level. But if you look at the way, this particular level is getting challenged, clearly 8 weeks of decline is what we saw from that particular swing low. And it has almost been less than, 5 weeks now, wherein, this level is again getting challenged. So this is a good clear-cut sign of an impulse getting developed. So I think it may be a minor hurdle, but not a major one. And we may see Nifty comfortably, trending towards that 18,300 zone.
Right. And if you see in the last 1 month as well, very interestingly, we've seen both FIs and DIs which have actually emerged net buyers in the cash segment. And this is after a long time for April expiry. Now, there is support coming in from there because if we see the last month performance of all the indices, except the IT index, majority of them have ended in the positive. Good returns that have come in as well in the range. And specifically, if you see Nifty Bank, Nifty PSU Bank, or Nifty Private Bank, the gains are in that range of 8.8, 8.5 to almost 14%. And that's where it seems that the action is. Again, auto has been positive, FMCG has been positive as well. From a sector-specific perspective, where are you seeing the action come in? Because IT has been an underdog.
Rightly said. In fact, I think IT post results. What we have observed is that after the initial reaction to the earnings, Nifty IT is also stabilizing. Especially if you look at some of the mid cap stocks within that particular space, they have already lifted off. They have already given us a trading range of around 8 to 9% in the last week itself. So I think even IT is participating, but I think the major emphasis should be given to something like a Nifty Bank, which has been in a stellar performance mode right now. Even right now, if you look at the way it has performed this week, it has given a gain of almost around 3%. And still, even here, we don't have any signs of exhaustion. Last week, we had an observation that probably Bank Nifty could swing towards 43,500, and the data is again shifting higher. So the immediate base, which looks confident, is placed at around 42,500. But I think the way both the indices are trending, I think Bank Nifty would be the first one to scale back towards its life high levels, which are placed around 44,150 kind of a zone. So I think Nifty Bank should not be missed. I think this is where the leadership is coming. Auto again, we have seen some diverging moves within that particular space, but net, I think even that particular pocket is outperforming now. So I think it's an overall performance.
Right. So overall, if you see in terms of the rally that we are seeing so far, do you think it's a rally which has primarily been led by short covering, specifically in a couple of large Nifty names?
We did see some bouts of short covering, but I think going in the last leg of the April series, we did see a lot of unwinding of shorts plus a mix of longs. So I think it is not only short covering, but there are signs of long additions which are also being evident. So I think the short covering move was quite obvious when we started this particular week on a very positive note. And after that, I think Reliance was the only stock which was holding itself within that particular narrow range. It had almost spent the entire expiry within that particular range, close to around 2340, 2440, 2330 kind of a zone. So I think even that particular range has been ejected now. And even in a stock like Reliance, we have signs of fresh long additions, and I think that particular move could again amplify the move for the Nifty. So I think net I think there have been a mix of short covering plus long positions which are evident as of now.
Right. And overall, if you see in terms of Bank Nifty as well, it's holding on above 43,000 levels on closing basis. I mean, 43,200, I beg your pardon, on closing basis today. What would that mean from a levels perspective? And are the charts indicating an overbought zone already?
I think most of the indices are in the overbought zone, but I think what needs to be clear here is that are there any signs of divergence there? So if you look at the Nifty Bank itself, the RSI is placed somewhere close to 74 right now when it comes to futures, but there are no signs of any divergence on the price with the RSI. So I think that this overbought stay may continue. And the way Nifty is displaying, Bank Nifty is displaying its strength. Probably 43,500 is the level wherein one can review, this particular overbought state. But I think it's a good sign that even if the Bank Nifty corrects from here on, I think that those corrections should be bought in. The floor is set at 42,500. So until unless this particular level is not breached, the probability of a move towards 44,000, 44,150 remains bright.
Right. In terms of stock-specific action, if you look at an SBI as well as a Kotak Mahindra Bank, both these counters have seen good amount of short covering. Does that mean that it can lead to fresh upsides as well? Because clearly, KMB a gain of almost 11% in the last series.
Well, in SBI, we have been tracking more of longs. In fact, the March series ended on a very negative note. It actually ended near that support of around 500, where we had seen a very strong put writing confidence. And since then, when the April series started, we have been tracking much of longs. So I think there are no bouts of any shorts being present when it comes to SBI. And that's why I think the range which has shifted now from 550 to 500, this particular range is now shifted to 600, 550. So I think there are good evidence of longs getting continued when it comes to SBI in this May futures. May series. So I think the immediate level from a momentum perspective stays at 560. Even here, I think fresh longs can be added for a target of around 600.
Right. Moving to the FMCG pack, how is ITC looking? Because overall, if you go to see clearly, it's a back-to-back outperformance that ITC has been giving all this while. So firstly, are you seeing further upside from the data? And secondly, how does other counters like a Dabur look as well? Because the kind of open interest addition that we are seeing, do you think that could join the rally as well? And if so, what should the strategy be?
Honestly, Dhiral, we have been surprised by the move in ITC from the levels of around 390. So we have really not participated in this particular up move. The primary evidence being that on the monthly scale there is a very strong overbought reading, and that particular reading has been there since last series. So here I think we have already missed the rally. But when we look at the other pack of strength, we have been participating in stocks like Britannia. I think there I think the evidence was much more clear. The base was well settled. So I think Britannia is something wherein we still see further upside towards 4800, which should be met during this particular series. Even here there are fresh signs of impulse which has been displayed. The monthly closing has almost engulfed three previous bars. So the structure is very strong. The base has been elevated back to around 4500. So probably any declines towards that particular base should be utilized to create long positions. We are expecting this particular move to continue towards 4800.
Right. Now, coming to the IT pack, clearly, with regards to Infosys and TCS, after a very long time, there is some bit of active movement happening there in terms of the call buyers, though the quantum is pretty small. What is it indicating? And do you think it is going to be time to actually start going long on these two names?
We will wait for some more evidence to come in. If you look at the structure for Infosys has been weak. But also the fact is that the level at around 1200 has been respected twice. So probably we'll wait for a fresh move to unfold. There are still no signs of a reversal here. So the immediate level that we are tracking, which may give us some confidence, is the 200 weekly exponential moving average, which is placed at around 1310. So I think until unless we don't see a strong swing above that particular level, it's better to avoid this particular stock even from a trading perspective.
Right. Moving from there on, let's quickly look at a few of the other names which are actually active in today's session itself. If you take the likes of a PI Industries, again, heavy accumulation seen on these names. Z Entertainment, Canfin Homes, Coforge are also seeing a long build-up. What should the strategy be?
The data of Coforge is convincing. In fact, here, despite of the fact that the entire pack was displaying a low top, low bottom sequence, the leaders were trending towards their swing lows. This particular stock was again, displaying some signs of strength and stability when it came to the previous series. So here, I think the floor is very well maintained at around 3800 now. And we may see this particular move getting continued towards 4460. So I think even if the stock declines back to somewhere close to 4000, I think it will be a good level to accumulate this particular counter. Overall, the structure is indicating a price target somewhere close to 4460.
Okay. And if you take financials like a Shriram Finance, ICICI Prudential, HDFC AU Small Finance Bank, what should the strategy be? Because Shriram, again, short build-up seen. And on the other names that I mentioned, we were seeing some bit of short covering today.
So one disclosure is that we have recommended IDFC First Bank to our clients from a long-term perspective. We are expecting, this particular move to extend towards 84 levels in a year or so. So if you look at the entire structure, especially the last 4 months, this particular stock displayed a good sign of consolidation. It was holding itself well above its 200 monthly exponential moving average. Plus the kind of placements that we are seeing on its relative strength and the ADX, both the trend indicators, they were indicating that the stock could sooner or later display a breakout on its long-term scale. And this is where the weekly charts are unfolding well. If you look at the structure, it looks like a bullish pennant formation. The breakout is already now in place. We are expecting this particular rally to continue towards 84 levels, but on an immediate basis, from a trading perspective, we may see a swing towards 68, 69 zone, and the same could be participated with a stop loss at around 58.
Right. And Sachit, apart from these names, anything that you think should be looked at from Tuesday's perspective? Because again, next week is going to be truncated.
Well, there are a lot of stock ideas which are popping up right now, but we are focused on certain stocks wherein they are still near to that basing formation. One stock that has hit our radar is United Breweries. We have already seen a fresh sign of impulse on its weekly scale. We are expecting this particular move to unfold towards its 200-day exponential moving average, which is placed at around 1550. So we are recommended longs here. Even right now, I think a trading stop loss can be placed somewhere close to 1460 for a price target around 1550.
Right. So that's with regards to a couple of counters we should be watching out for as well. But interesting day of trade. Thank you, Sachit, so much for joining us on the show and giving us those details. In terms of closure, 18,052 is what Nifty 50 has ended at. And again, the rally that we've been seeing also in the last hour of trade, that has been spectacular because, again, we've seen that almost 80 to 100 point rally that has come in the last hour. Bank Nifty as well. Closure about a 43,200 levels, I beg your pardon. 230 points up move coming in terms of Bank Nifty, which has ended near the day's highs as well. In terms of stock-specific action, interesting counters, and clearly, if you go to see the advanced decline ratio as well, has been pretty much in favor of the bulls today. Adani Enterprises, Adani Ports, Nestle, Wipro, Britannia have been the top gainers, whereas Axis Bank, Titan, ONGC, JSW Steel, as well as Cipla have been the top losers as well in terms of benchmark indices. Let's quickly look at the Sensex as well. If you see in terms of the levels, around a 450-point up move coming in there, ending above 61,100 levels in terms of the Sensex. And if you see in terms of broader market, Hindustan Oil Exploration, EIH Hotel, CET saw an interesting move, a 12% up move coming in there. PI Industries as well, 10% on one of the subsidiaries, investing in terms of an American company. So these was few of the goiners, whereas MMTC lost some 11 to 12%. Raymond continued the downward spiral after the announcement with regards to the sale of their consumer business. And you had a Godrej Consumer, which was under pressure today. So overall, a good day of trade, a lot of stock-specific action is what we are seeing. Next week is going to be truncated. It is a long weekend. So how Tuesday opening is going to be extremely important because there will be today and Monday's global market impact that will be coming in. But nevertheless, markets seeming to have good amount of strength, and it's going to be an interesting week next week as well. That's all that we have in this session. Thanks for watching and have a great long weekend.